Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about FUBO. Now, I've done a previous video on this one, but nonetheless, this will be a wholesome video that will get you everything you need to make an educated decision. Make sure to drop a like to this video to help this channel grow, subscribe, and leave notifications on. I split this video into 3 parts: intro, technical analysis, and due diligence. You'll find the links in the comments below. Let's jump right into it. FUBO. So fuboTV here, it is one of the new risers for different TV service, or actually a streaming service itself. The motto here is come for the sports, stay for the entertainment. Now, it's not listed on here on their website, but if you watched BMO conference with FUBO at December 9th, you would have heard that from their leadership. 8 main live channels and 0 fillers, beyond sports, both the original and Canada game, FUBO Sports Network, and there's a different bunch of them. They're available on iOS, Android, Amazon Fire TV, Roku, SmartTV, Apple TV, and Chromecast. I'm going to dive through a bit more news, but before we do so, make sure to drop a like to this video and subscribe. Taking a quick look into how many subscribers I have, 85.7% of you consistently watch my videos but are not subscribed. So please subscribe. It helps YouTube know that I'm doing okay and to recommend my videos for others. Moving on. FUBO here, there's no latest presentation, but there is an event coming in on the 14th for their annual shareholder meeting. I do expect that they're going to show up a presentation with a bit more concrete numbers about their subscribers, their estimations, and their revenue coming up for their estimated years, at least for the next quarter or at least for the next year. Now, we still have a lot of information to go through. FUBO adds Premium Entertainment Network EPIX2 programming lineup. And if you wonder what EPIX is an additional package. Basically, it's a suite of premium entertainment network featuring original programming and blockbusters movie to its live TV streaming platform. Now, starting today, FUBO subscribers can stream EPIX top entertainment program, including hit movies, popular film franchise, and critically acclaimed original series such as The Godfather of Harlem or Pennyworth. EPIX programs also include in-depth dossier such as NFL, The Grind, a perfect complement to FUBO's TV first offering NFL. The Grind is produced by NFL Films and hosted by Rich Eisen. Okay, so is there going to be an additional cost? The EPIX package will include EPIX, EPIX2, EPIX Hits, and EPIX can be added to FUBO's standard plan, which offers more of a top Nielsen ranked sports news entertainment channels for cord cutters than any other live streams platform. The EPIX package will be available for $6 a month, but for the first 30 days after launch, subscribers will be offered a special promotion for $2.99. So it is an additional cost. The EPIX platform is this one here. You can look it up. It's epix.com. It has both live and movies, so you can go to schedule and you can watch when the next live movies coming up. So right now, Transformers Dark of the Moon is playing. Pet Cemetery, Bud, and Platoon. So we'd be watching maybe 2 out of the, or 3 out of the, one looks a little weird. Nonetheless, movies, some of the movies are actually blockbusters. So let's go to their homepage, going down here. Got trending movies such as, let's see, Mission Impossible Ghost Protocol, Mission Impossible Fallout, the rhythm sections. Okay, we'll move down a little bit to genres. Drama, Creed 2, Judy, Color of Money, featured actions, Expendables 1, 2, and 3. Oh, okay, it's a lot more action. I like Mission Impossible and Expendables. Like a Boss, Nobody's Fool, and The Dictator for featured comedy. What to Expect When You're Expecting, What Men Want, The Hustle, featured thrillers, Primal. Not familiar with any of these. Watch more thriller. Oh, Avengers are here. Okay, Thor, Sonic the Hedgehog. Okay, so they have some decent selections here, nonetheless. Some even throwbacks. And while I was actually going through, I think they even have... No, never mind. fuboTV has Newsmax, which is, I think, a bit more diverse in terms of the offerings. Anywhere from some mainstream medias to Newmax and probably Owen on there. Moving on. Going on with the next news coming up, which was the BMO conference. If you haven't watched it, this link here will get you a direct, or actually this link here, will give you a direct link to what was, I think, an hour presentation or discussion with BMO Growth and ESG conference, and you get to hear a bit more about their plans. If you're investing, definitely watch this one. I don't know what you would lose. You'd actually gain a lot more information. So I can't present everything on there. A lot of it was discussions and plans, but nothing concrete, solid that I was able to present for you, other than their main moving forward plan is to come for the sports, stay for the entertainment kind of system. So they're really distancing themselves from being the next Netflix or something. They want to be the next sports Netflix. fuboTV acquires Balto Sports as the first step into online sports wagering market. So in connections with the deal, Balto's team will join fuboTV and will be instrumental in driving the company's expansion into both free-to-play gaming and online sports wagering. The online sports wagering market is expected to reach $155 billion by 2024, according to Xeon Market Research. So that is a large amount of capital that's going to be put into it, and the return sounds by $155 billion sounds as a good return on investment by 2024. So moving on, actually before we move on, David Gandler, co-founder and the CEO of fuboTV, as we said in our third quarter earnings announcement last month, fuboTV sees the online wagering space as a complementary to our sports TV, first live TV platform. We believe there are significant synergies between consumers who enjoy wagering and our subscribers who enjoy streaming live sports, creating a flywheel opportunity. As we previously expect, one of our goals with wagering is to expand our total available market by developing another important revenue stream for fuboTV, as we're doing with our growth ad sales business. Alright, moving on. They also hired the former Spotify and Axiom product head Mikey Berkeley as the chief product officer. Now, this person has over 20 years of experience in that market, so you do expect that there is going to be a lot of new updates. There's going to be a lot of new changes that are going to happen that are going to be positive, coming in from someone who worked for Spotify and Axiom. Now, other news coming up, I think it's just the third quarter earnings, but you can go ahead and dive through more, but I don't think anything is more significant than the ones I'm covering today. Some of the highlights that we have are revenues were $61.2 million, a 47% increase year over year on a pro forma basis, or 71% excluding 2019 licensing revenue from the FaceBank AG business sold in July 2020. Subscription revenue was increased by 64% year over year to 53.4. Advertising revenue increased 153% year over year to 7.5 million. Paid subscribers at quarter end totaled to 455,000, an increase of 58% year over year. Average revenue per user was 67.70 per month, up 14% year over year. Wow, $67 per... Okay, I'm hearing you. Total content hour streams by fuboTV users, paid and free trial in the quarter increased 83% year over year to 133.3 million. Monthly active users, MAUs, watched 121 hours per month on average in the quarter, increase of 20% year over year. Now, I'm not sure if these numbers are mainly just because of some lockdowns around the world in North America, but these numbers are quite impressive. I mean, if you look at the 121 hours per month, that is more than 5 days straight. $67 a month. That is quite a lot of money. I pay around, what, $14 on Netflix, and I think that's a lot that they're taking off me, especially coming back from where they were, I think, was it $6 like 4 or 5 years ago? Anyway, revenues. What we get to see here in revenues, we don't have something comparable for 2019, at least on their sheet. Revenues is around 54. This is in thousands, 53 million, 400. Total revenues is around 61 million. We look into operating loss, we're looking at $302 million in terms of operating loss. The biggest thing here is impairment of intangible assets and goodwill as the total expenses. Moving on, next. Their net losses was actually 274 million. A lot worse than what they had last year, but it really is different here because of how their business was set up. Nonetheless, 274 million is quite a lot. In terms of their assets, they have around 800 million, around only $38 million in terms of total current cash. Total current assets is around 58. Total liabilities is around 290. Now, their total stockholder equity is around 508. But their entire revenue or net loss is around 274. Trying to make a bit, or 274, yes, 274 million. Trying to add these numbers around, things look a little bit weird, because if your quarterly deficit, where was it? They have the deficit somewhere around here. Okay, accumulated deficit is around 458 million. And if you were to look into their net loss or operating loss of 302 million, that is in the quarter for 3 months ending. And their current cash is 38 million. They're in a big trouble, but I've been told, okay, this was just because they're setting up the business and all that stuff, acquisitions, but nonetheless, they need more cash on hand. They did have an offering not a long time ago, so I do expect some of the cash to come from there. Looking back to all news, the offering programs were coming in from around here. Announces upsize and pricing of offering, and then they did have as well launch off, because they had a reverse merger, so they already launched it, so there might have been a bit more of a pipeline. So usually there's a lot of expenses coming around there. That is expected. They did have an offering before, so probably going to be covering a lot of the costs. So for the time being, I'm basically gonna look away from their massive loss, just because as a setup of IPO and reverse merger. That's all I'm gonna say. Moving forward, they don't have a presentation on their website. Quite disappointing. I would really like to see a presentation, but you know what? We're gonna see one tomorrow, so I'll let that slide. Next thing coming up is their market capital. Their market capital currently, I don't know why this is different from what I actually entered. There we go. Market capital is around $1.9 billion. It's around $2 billion currently. Their key evaluations are looking to be around 8.6 price over sales. Now, I'm going to look away from that just because the recent IPO, reverse merger IPO, and sometimes ratios are a little bit mixed up. Next is what I want to look at is from the other similar market caps. Price over sales, you get to see they're usually below 1 in that industry. So it is something interesting where they need to fix it up. And the price over book is usually these kind of streaming channels, or media industries. They're usually a lot undervalued, like 0.3 and 0.4 for Fuji Media Holdings, with very much of a similar market cap. So nonetheless, it's quite interesting for me. Especially that they do offer dividends and this one doesn't. Now, some important things is to look from this one as a review perspective. So from a reviewer here, this is on Tom's Guide, and I have other reviews from PC Mag. The pros is a huge amount of channels, niche sports network for some 4K content. Against is more expensive than competitors, no Turner channels, CNN, TBS, TNT, etc. fuboTV standard starts at $59.99 US monthly. fuboTV Elite starts at $79.99 monthly. Moving on, some of the main kind of reviews. Now, it did get 4 out of 5. Excellent. FUBO is a particularly good streaming service for sport fans, but it's mainly news and entertainment channels. Should appeal for a general audience too. Tons of live sports, on-demand entertainment content, that's part of the pros, reliable streaming, excellent web interface, capable DVR functionality, and some 4K content. Cons is costly add-ons package, no regional Fox Sports Network or Turner channels, most live streams limited to 720p, some bugs on the mobile apps. Okay? Some similar products that they look around at is apps as a YouTube TV, Hulu, Prime Video, ESPN, Sling, AT&T TV, Netflix, CBS All Access, Philo, Stars, Box. List goes on. Now moving on towards Ed, what do you think about this one? And let's jump right into technical analysis. If you haven't subscribed currently, please make sure you subscribe. It really helps my channel. Alright, on a one-day perspective, what we get to see here on an MACD is something interesting happening. The signal line is actually crossing up from the bottom, the MACD line. That is a dangerous sign. And usually what this says is, especially with histogram going negative, is we're in for a negative pullback. 80X says this is way overdue. Above 50, that's where negative reversals are likely. Momentum has been itching down a little bit. William %R is highly oversold. So it looks quite interesting from the average or the technical indicators around here saying, hey, we're in for a ride for a pullback. And you know what? That's not technically bad for a pullback when you really have a nice uptrend. The moving averages are saying above 2287, it's in the trading action zone between the 10 SMA and the 30 SMA. 2786 to 2287. That's where positive reversals are likely. Now, currently it's dipping into there. 1784 is the 50 SMA, so above there it's still bullish, but it looks like it might get a really bad pullback. Now, on a 2-hour perspective, what we get to see is things have started already to look quite bearish. We might get jumps here and there, but things look a little bit rougher, and momentum has been lost towards the negative momentum. Moving averages, this one is expected to trade somewhere between 2771, 2519 in the middle, and 2267. One thing to note is volumes have been somewhat consistent from where it was starting. So this usually is quite interesting because it shows more folks are interested in this one and are looking to invest in this. Stochastic fast and stochastic slow are both showing to get out because a pullback is coming. Fibonacci retracement supports and resistances put 2749 as a significant support. Below there 2338, below there 2049, 1761, and 1404. Current significant resistance is at 3272. Now, let's quickly do price line actions for significant supports and resistances. 2753 seems to be a current support. Below there 2610, below there 2448, below there 2289, and then jumping down to 2012, 1556, and then down to 1378. Significant resistances are 2864 and 2979. Not a lot of resistances here, and then jumping up to 3273. Now comes to the question on, Ed, what do you think about this one? Well, trading-wise, I think this one is due for a pullback. Investing-wise, I'm not sure the price overbook. They need to really show better numbers and better values. And I expect that that's going to happen soon. I would love to see their estimates tomorrow. But investing, I think you might want to wait a little bit for a pullback. But if you already invested from the lows, then I think this is probably a solid one to keep for perhaps a couple years. But trading-wise, I think this one is due for a pullback. Nonetheless, it really looks good in terms of platform, their acquisitions, how they're building everything up. And nonetheless, long-term, I am bullish on this one, but I think it has a pullback coming. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.